We got some volatility, man. Holy. Meta and Microsoft just reported earnings after hours yesterday. One is down double digits while the other's up double digits. So today I'll be diving into their earnings, seeing how they did, explaining some things, and also just giving my opinion on it. And full transparency, I own both Microsoft and Meta stock. They are both in my portfolio, so I'll also be letting you know whether I'll be buying more of either company after earnings, selling either, or just holding them. So getting right into it, both Microsoft and Meta beat on both revenue and earnings per share, and that looks great on the surface, but I want to let you know my more in-depth opinion, so let's now dive deep into the numbers. Starting with Microsoft, I want to get this out of the way first. Their net income and earnings per share for this quarter looked drastically higher than it should be because of a one-time accounting gain of $7.6 billion from the recapitalization of their OpenAI stake. And let's be clear, that is a paper gain. They did not receive that as cash or anything like that. So we'll have to look at their non-GAAP numbers to see the real numbers for the quarter. For revenue, they were expected to do $80.3 billion, and they did $81.3 billion, up 17% year over year. Earnings per share came in at 414 versus 392 expected, up 24% year over year. That's very good there. Cloud revenue came in at 51.5 billion versus 50 billion expected, up 26% year over year. And Azure revenue growth came in at 39% versus 37 to 38 expected. Very nice, very nice. So now I will go into what, in my opinion, were some of the key highlights of Microsoft's report. First of all, Microsoft's cloud backlog jumped to over 110% year over year to $625 billion. That might sound great, but keep in mind almost half of that, literally nearly half of their backlog, is solely from OpenAI's commitments to use Azure, which I really don't like, but that is just the case. Almost half of that $625 billion is OpenAI's commitments to spend that much. The second key highlight being their CapEx increase, and it comes as no surprise that Microsoft and Meta are going to go crazy with CapEx increases, but it is pretty insane. Microsoft spent $37.5 billion last quarter on CapEx, up 66% year over year. Gosh, I know that AGI ain't gonna build itself, but damn, $37 billion in a quarter. But yeah, that covers the key highlights of Microsoft's earnings. So overall, I will rate their report C or 7.5 out of 10. Azure growth at 39% is really good still, though slight deceleration there. Revenue looked good, not great, but good. EPS looked pretty good, being up 24% year over year. My main concern is just how fast CapEx is going up. Now, I'm not someone who is really against these large CapEx budgets from big tech. However, their CapEx growing 66% while revenue grew 17% is pretty crazy. So overall, not a bad earnings at all, but nothing wowed me. And if anything, a couple more minor concerns popped up this earnings for Microsoft. In terms of what I will do with my position in Microsoft, I'm going to hold. Though they're trading down a bit from where they do historically, I feel it's kind of deserved right now, to be honest. Their core business being Microsoft 365, Excel, and their whole software suite is a bit under pressure from AI competitors, and the growth of their other largest business, Azure. I have serious questions about how much OpenAI is actually going to spend with them. And if they don't spend what they're, committing to, then that will greatly decelerate Azure's growth rates and make them look really inflated right now. But their income statement looks great. Their EPS was up 24% year over year, and Azure still grew insanely fast. And their forward PE is around 24 right now. So I'm happy holding. Not really the best buy in the market right now, in my opinion, with some of the risks, but I believe their growth and valuation currently keeps them as a solid hold. So now let's jump over to Meta's earnings. For revenue, they did 59.89 billion versus 58.4 billion expected, up 24% year over year, which is very impressive. Definitely showing us how that AI spend is translating to real user growth, keeping people on their apps longer, and making advertisers more money, therefore they're spending more with Meta. So this is very impressive growth considering Meta's size as well. But let's continue. Earnings per share came in at 888 versus 820 expected, up 11% year over year. That's a bit unimpressive, and it was due to costs being up so much year over year for Meta. And I mean, EPS and net income so badly underpacing revenue is not what you like to see as an investor. It should be the other way around, but let's keep going. Daily active users met expectations at 3.58 billion people, up 7% year over year. And this stat is just insanely impressive still. It feels like it won't be too long until the whole world is on Meta's apps. Like, geez. And then net income came in at $22.8 billion, up 9% year over year. So, okay, now I will go into what I thought were the key highlights for Meta's earnings. And that first highlight being, and we'll start positive with, how well Meta's ad business is going. Ad impressions grew 18% year over year across all their social media apps, and price per ads rose approximately 6%. Zuckerberg also stated that WhatsApp, which they only just started to monetize, reached a $2 billion annual ad run rate. So, combine all of these metrics with also the fact that they're growing their user base 7% as well, man, are they bringing in the money right now. Also, all of the growth potential they still have with monetizing WhatsApp is insane. Plus, they haven't even really started to monetize Threads yet, as they really want to focus on continuing to grow the user base there. So their core business just really looks phenomenal right now. And if it wasn't for the overly crazy AI spend, Meta could be up easily 15 to 20% plus instead of around 10%. Now we'll move on to the negative highlight, the spend. So analysts estimated beforehand that Meta would likely spend around $110 billion in 2026 on CapEx. Already an insane stat. But unfortunately, I guess Meta is just addicted to beating every kind of Wall Street estimate because they decided to shatter those expectations as well, saying they expect to spend between $115 billion and $135 billion in 2026. And if you choose the midpoint there of $125 billion, that would be a 73% increase year over year from 2025. Just an unreal number. They really need to moderate that growth in 27 and 28, hopefully even slightly decreasing it after this year, but I'm not going to hold my breath for that. But moving on, I would give Meta's report a B or 8.5. Revenue was up 24%, their social media platforms are growing very nicely, and they're being able to charge significantly more for their ads on their platforms. I mean, their core business is just on fire right now. But their Reality Labs business just continues to be a huge money loser, losing $6 billion in this quarter alone. That is almost nothing compared to how much they spent on CapEx last year, and definitely nothing compared to how much they'll spend this year. But a huge differentiator between Meta and Microsoft, who's also spending like crazy, is that Meta's overall revenue has accelerated so much more so because of their gains in AI compared to Microsoft's overall revenue growth acceleration. And I believe that's the main reason one stock went up huge while another went down huge, and also the fact that Microsoft Azure grew just slightly below 40%, which many people were expecting it to be in the 40s still. Yeah, if Microsoft's revenue growth, if we saw more acceleration there, that stock would be up huge today. But now, what will I be doing with my Meta position? Well, I will probably keep holding. Thing is, even in the 700s, I believe Meta is very undervalued still. However, I own so much Meta. I have been a very active buyer of Meta over the past year, and if Meta begins to go on a run, like at all, they'll very quickly become my top position, and I'm fine with them being my top position, but my cost basis is in the high 500s right now. So unless they dip to like the mid 600s or obviously below that, then I'll definitely pick up some more. If they stay in the 700s or go above that, then I'm fine just holding on to that position. But don't get me wrong, Meta is still a phenomenal buy in the 700s. If I was less exposed to them or my cost basis was higher, then I would very much like to get more of them at this price. But for now, I'm happy holding and just going after some other opportunities in the market right now. But I'm going to end this video here. Let me know down in the comments, are you buying, selling, or just holding these stocks? I want to know what you guys think. And also let me know what you guys think I should improve on in my videos. I'm in the phase of just trying things out and improve mode right now. So anything I said in the video that you don't like or think there's a system I can do better on, I would love feedback in the comments section because I want to improve. I want to make valuable content that you guys enjoy and that is actually beneficial to you in learning about these companies. But I thank you all so much for watching, and I hope we all have a great day.